Hello, this is Dave Knight once again here at KnightCapitalManagement.com. I want to welcome you to the continuation of the best trade of the week. This is part two of the series of the going on Thursday, September 18th, 2008. We looked at the two shorts that I took during the morning and the afternoon, early afternoon. First one for 5 points and the second one for 6 points. Combined on the two trades for every two contracts traded, that was $1,100. So it was 500 for these two, and then 600 for these two. So 250 a piece for this one, 300 a piece for this, 5, 6, 11. So we're looking at $1,100 right now that I have put in the bank. Now here is the bottom at 1136 and a half that came into the market itself. Now the reason I did not trade and decide to go long, obviously, when you're hindsight's 2020. We all know it finished up way up there today during the Thursday trading, and then on Friday obviously it went even higher. And but when you're sitting here and you're just trading the market and you're trying to trade what the market's trying to tell you, how can you look and see where the market's doing? Now the volume is looking good, that we're having a swing. Something's happening. Something's up. The bottom is in, although we did not know. It could have just as easily come to blue bar, come up to this, test this, what would become support or resistance in this case, and could have went and further moved. Now, obviously, you all know that the government stepped in, did what they did, and they made their, I guess they made their move in the market. And now that we know what's going on, it's a lot easier to talk about it being on Saturday, September 20th, as opposed to being right in the middle of it on September 18th on Thursday at roughly, what is this, 3:15 in the market, or 1:15 in the market, 13:15, or 1:15 in the market. So what I'm going to do is I'm going to fast forward to my entry. I just wanted to take one quick look and show you the next bar up. And let me stop it. Now, let me stop this, rewind just a little bit. And let me blow this chart up. Well, it didn't actually finish where I wanted to. Hold on. Let me finish this bar. Stop it. And we blow this screen up just a little bit so you can see what I'm talking about. Here's the bottom that I was talking about. Now, this bottom, 1136 and a half, is the current low of the S&P futures, the E-mini S&P. We did not know it. Now, at this time, it was looking, I could just as easily have went back down, but now in hindsight we know that this is the current bottom of the market, and this will be an area that we'll see if we test next week or we continue to skyrocket up because the short sellers can't sell financials. Well, I guess we'll see. But the futures market can still short the market, as we can see. This is a short, even on a Thursday when the short sellers, they put new rules in for short sellers. The futures markets actually went down, and on Friday, if you take a look at that, after the open, it actually went down as well in the futures market. Anyway, so let's just go ahead and roll the. This would have been, if this would have been a spike reversal right here on this bar, this would have been a good area to get in. Now, this support being resistance at 1157, we talked about that earlier, how I took the trade down to it. Now taking the trade above and then moving forward, that would have perhaps been a good trade if this would have been a spike reversal, maybe something that I would have tried out. But the blue bar really didn't show anything of what it wanted to do, so I did not do anything on this part and let the market run and tell me what it wanted to do. And so let me pause and let me get to where I want to talk about. Okay, so here we are, and this is what the bar shaped up. Now we're actually looking at, in this case, right at 3 o'clock in the entry into the market. I'm going to put my market entries in here and show you how I played this, and then we can discuss about it a little bit further as we move forward. But one thing I want to do is actually show you one thing down here. Now, you can see this is a green bar. Now, this may have been a good entry, but if you look down, here's the green bar, and we go down here. Here's a blue bar, low volume, and it's below the average volume line. This was not a good trade, and as you can tell, the market kind of moved down. Now, here's your green bar you have right now, and here is the green bar with the increasing volume. that we have, and here it was the market that we are right here. Now exactly this is where I entered the market on that green bar movement. So let's talk about that just a little bit. Let me put my targets in. Okay, so here's the targets that I was looking at. We had the market itself at 1172.5 right on the open, get in. Here's my stop at 1168.5, 4 points. 1170, I should say 1178.5. 1179 is where I actually got out. The market was moving pretty quick that day, as we know. On Wednesday it flew up. 1186.5 on the upper daily range right here is what I was looking at. And then we had this right here. Let's ignore that for now. That's the range that will come into the play for the market. But this was your upper daily range when I was looking at the trade. So this is how I set it up. So let's just go ahead and roll, and let me show you where I got out to start with. Okay, as I said, I entered the market at 3 o'clock. Now this is 3:02. 2 minutes, we moved up roughly, what's that, 6 and something points. And I got half of my contracts off here, 1179. It actually moved in front of that. This is where my 1179, I got that out. And this moved so fast, so quick, that I took this 1186.5 off, and I moved all of my contracts up to break even that was remaining on the trade itself. So let me go ahead and move forward and show you real quickly what happens here. Just show you what 305 is. Okay, here's 305 in the market. So 5 minutes. In 5 minutes we went from 1172.5 to well over at the 1188.25 is where we're sitting here in 5 minutes. Made no sense to take this off at this part here. I wanted to see where we're going to go, and we'll talk about that in a little bit. So this move here was an extreme move, and I put my stop in at 1 point above 1173.5 on this move, and soon I'll put it to 1179. You'll see a little bit later on that you'll see I've moved it to 1186.5. So I'm going to pause this and move forward in the tape again. Here we are at 315 right here. Here's 315, and we opened up at 1200.25, and I had at this point on this bar opening, here's where I moved up to 1186.5. So I wanted to make sure that I took everything out of the market. If it would run back down and this was a false move, I wanted to try to capture this move from here, 1172.5 to 1186.5, and let's show you how this day finished off. So let me go ahead and pause and move forward. So here we are at 3:30. Now this would have been a good move right here to attempt another long position. I did not do this, but I know some traders that did. And you were on the high of previous day high, shooting for, in this case, the high of this bar. Now it doesn't look like there's lots of room here, but that's 1203 is what you're looking at. At 1208, you could have easily made some profit just shooting for the upper daily range, the new upper daily range of the market. Now this bar itself, it's high in this 1210.25, and it's a mark that I use later on. I also want to show you one other thing. Why did I make 1210 my target? It was a number I liked. 1210, 1210 just seemed like a cool number. Also, we had the highs here. When this market does move up from 330 to 345, it kind of bounces off this area. I moved my stop, and I'll show you that. Okay, now we're looking at 345. As you can see, the market in the last from 3 o'clock to 345 in this case, it moved from 1172.5 for my entry way up here, and this bar actually opened at 1213.25. 1210 is where I just looked at it. It was a little below this 1210 bar right here, 1210.25. I thought, well, you know, if it stops me out there, I'm extremely happy. If it goes up here, I would have got out at the 4 o'clock bar. Now this bar goes up a little bit, and then it comes down and takes me out. So anyway, this is the trade itself, and I'm just going to wrap it up. So let me just go ahead and let the tape run a little bit so you can see the market moves up, moves down, up, down, up, down. And right there is where I got stopped out. The spike reversal showed in the market. It was a good time to eliminate all the trade. Okay, the total in the trade, $18.50 plus another $350, or yeah, but let's just say $21.50 is what I ended up getting. Now $21.50 added to the $1100 got you you're $32.50, $3,250. So once again, this is Dave Knight here at Knight Capital Management. I want to wish you all the best in your trades. Good trading, everyone. Let's go get them next week. Thanks. Bye.